My name is Shane Morand, and you're joining us on Live from the Vault. We have an amazing episode for you today. Of course, Andrew Maguire is going to be joining us in a second here. We're going right to Talking Gold with Andy Maguire. And I just want to encourage you, because the topics that we're going to be discussing on this episode are going over the Kinesis monetary system, as well as the historic updates that are happening right now in the physical gold and silver marketplace worldwide. So with that, it's my pleasure to head over to Talking Gold with Andy Maguire. I'm so excited about today's call. Over to you, Andy.
Shane, thanks so much for the intro. And you know what? I'm looking forward to chatting with you later, because you're a big part of this. And I remember you were at the very first Kinesis presentation. Oh gosh, that was it was in Switzerland at a ski resort, and it's 2 or 3 years ago now. So you've been really involved right from the beginning, and it's a pleasure to actually spend a bit of time with you for a change. We're usually rushing in different directions here, but I think what we're trying to do where we start is by really trying to answer a lot of questions, and I think we try to amalgamate as many as possible. And we just did, I just did a Sprott interview, and the amazing amount of questions that came from that, and the David Tice interview that we did previous to that also. And a lot of it revolved around the social side of things and about the miners as well. So we'll look at that in a minute, but really let's try and get through some of these questions, because people are asking questions like, are we overbought? Are we going to crash? All of these questions come up. What happens if the COMEX defaults? Well, I'll give you the update. And where are the revaluation levels? These are changing rapidly. So let's get into it, and we'll answer as many questions as possible. So right at the top of the pile are questions relating to gold's short-term, technically overbought conditions. Now, if you're a technical trader, you look at it, and you look at the RSI, and you look at the various signals, and you're going, holy smokes, every time it's reached this level, we've been smashed. Well, here's the difference. While the unwind of paper market liquidity is the primary driver that has driven gold through these long-standing, bearishly structured technical resistances that we're talking about, and which, if you recall, commenced when the paper market imploded on the March the 23rd, with these paper market shackles largely shaken off since then, the good news is that gold is now going mainstream for all the right reasons. And that's not been the case in the past. Now, just about every analyst appearing on mainstream media channels such as Bloomberg, etc., are now anticipating much higher gold prices. And even if these assessments are largely US-centric in nature, and we always concern what's happening in the non-delivery COMEX market, and most of these positions are aggregating in this market, which is the casino. But the bulk of these investments do not have stops, which is largely immunizes the large buildup of long COMEX-centric open interest. When we talk about open interest, we're talking about the chips in the casino. But essentially, historically, when they build up on when the long side, when people buy a lot of undeliverable contracts, they're historically flushed through position concentration. Now, we've looked at these in the past, and I really honestly suggest that we go back to some of the old videos if you haven't actually, if you don't understand exactly what position concentration and how the insider casino runs. But the only time we're going to see pullbacks is when we see gold and silver rise outside the liquid sessions. Now, we evidenced that on Tuesday morning, but then we see this as little more now than healthy backfilling, which gives the physical market time to adjust to all-time higher gold prices. Bearing in mind that the physical market has not been experiencing, it's revolving people saying, well, do I really want to buy at $2,000 or $1,980, or isn't it going to come back? Well, this is really important, because the thing is that we have a paradigm shift here. And this is in turn forcing discipline on the usual actors who are caught between the regulators breathing down their necks and a massive race into physical gold and silver globally. Now, naked shorting futures contracts in this environment is suicide. It used to be very profitable, but now it is not. This leaves the agnostic neutral algos, and we've talked about algos before, and there are neutral algos that will chase a cent either side of or a tick either side of a price, and they're agnostic, but they're usually run by a directional high-frequency trading bot that is controlled by these insiders. But really, what's happening now? So other than these few little bits from the side that these high-frequency traders are able to garner into events like we've got today, where FOMC is today and options expiry, those kind of events, they're being constrained to leading these neutral algos inside ever tighter ranges. And they're limited to what can be rinsed out before real delivery obligations force them to cover off bearish bets, because anything you do in the paper market is actually deliverable. Now, technical overbought indicators are being swamped by strong bullish fundamental drivers. And what really has wrong-footed the blinkered top callers, and this is people that have been calling a top in gold in the low 1700s and in silver at $17.50 way back on June the 15th, a rash of calls came out to say gold and silver are going to collapse. Now, the point is, in a fair marketplace, it is the fundamentals that dictate the technicals. Now, the process is underway right now and will be looked at by future traders as the commencement of this upcoming gold price reset. We're watching history in the making. Now, these evolving fundamental drivers have created what is really a buy the dip market versus a sell the rally market, which we've been accustomed to over the last few years. Now, really, to sum it all up, what changed in the gold and silver markets on March the 23rd was all the controlling market making insiders were no longer able to counterintuitively create sufficient volumes of undeliverable open interest to override these fundamental drivers. Now, the exchange for physical conduit blew up because insiders seeking to protect these long-standing bearish bets. Many of these bets were made a year ago or more, or have been aggregated and rolled forward multiple years. What it's done is simply pushed the paper, they simply pushed the paper price too low on March the 23rd, and the underlying bullion was demanded for physical delivery in massive size. This was physical bullion they did not and do not have. Now, we've drilled down into exactly how this played out in prior productions, and as I say, I would really encourage you to visit this, but bottom line, it is the fundamental drivers that are now overpowering the supply of rapidly shrinking, undeliverable naked short open interest. And as a result, market making insiders under pressure to supply bullion, they're not just scrambling to exit remaining naked short positions, but they're also moving to get on the right side of an inevitable gold price reset. Now, look, there's undeniable evidence to suggest that the wheels are coming off the central bank planner's wagon. There's not rocket science to see it. There's trillions of freshly printed stimulus, bond yield tinkering, and there's few people that doubt the bubble territory risk assets that are being accumulated by performance-chasing asset managers that are likely to continue to rise, driven by limitless money printing and a direct Fed purchase. Now, the Fed is buying most of the dips. But as we discussed with David Tice in our previous production, stratospheric equity valuations are on extremely shaky ground. Now, he's a man that understands these things. Now, these tail risks are being hedged in gold and bonds. This is a perfect storm, and you couldn't actually ask for a better scenario. Now, as far as gold's concerned, on a macro level, there's no doubt that the competing sovereign and central bank physical gold demand will continue to act as this major bullish driver to propel gold and silver significantly higher over the next few years. Now, look, I know there's lots of people out there talking about these things, but really, what are these? The current drivers, they're just impossible to ignore, no matter who you are. If you're an asset manager, I mean, you're looking at M2 at 24%. Central banks are de-dollarizing. Debt to GDP has risen to 127%, and rising geopolitics and political risks are just escalating on a day-to-day basis. That's notwithstanding the fact that 0 to negative interest rates, with those rates, negative to interest rates, the opportunity cost of holding physical gold becomes increasingly favorable versus just holding officially juiced risk assets. And I include unallocated gold as a risk asset too. Now, in a move to front run and avert an equity market sell-off, the Fed has nationalized bonds, and as a result, the 10-year yield no longer reflects future inflation, which leaves gold as the sole inflation barometer. The spike in gold is exposing the Fed's plans and driving more investment into gold. This is an ever increasing rolling snowball that's getting larger and larger. Now, these are historically unprecedented bullish conditions for gold and silver investors. Now, none of us have ever experienced this before. It is a new paradigm. And I don't care who you are, whether you've been in the business for 40, 50 years, or whether you've just been in the business or been watching gold for the last weeks. It is unprecedented. Now, in a bid to preserve wealth into this cocktail of bullish drivers, non-traditional asset managers are also incentivized to buy gold and silver. Now, gold has become a put option to protect risk assets. This is big because we're talking about asset managers. This is one of the primary reasons stops, i.e. positions that were taken long, have been immunized from being rinsed. Because from a historical level, every time, as we've just said, every time people got too long the casino chips, they were taken from them. Now, we're evidencing the paper gold algos becoming increasingly bullishly correlated to the performance of the S&Ps. So primarily driven by the collapse of real yields. And this explains a lot as the Fed pumps unlimited QE into the market. Relative to gold, the US dollar simply devalues against gold. And without even factoring any of the other bullish drivers we've been talking about, by osmosis, gold is revaluing itself one-to-one against the increasingly diluted purchasing power of the dollar, also against all other bloated fiat currencies. Now, into such unprecedented conditions, it's really impossible. This is another question. What should the price of gold be? It's impossible to actually accurately value physical gold and silver priced in US dollars. They're absolutely both in extremely strong demand, unprecedented demand. Our silver wholesale orders as of yesterday, as of today, are out into November and into 2021. We cannot get our silver wholesale orders fulfilled. Now, our interactions with the physical stakeholders, we're always trying to figure out, well, where is the point of inflection? The best analysis is that we can say is that there's so little vaulted bullion that will come to sale, at least in gold till 2,500. Nobody is a seller. Absolutely. And even then, at best estimate, this level likely triggers the revaluation point, resulting in a self-fulfilling feeding loop of higher prices. Now, obviously, we're not talking about tomorrow. We're talking one step at a time, but one very solid step at a time. Now, we've received multiple questions relating to concerns about being settled for cash. This is another question that's really been bombarded with. And people are saying, well, yeah, what if I'm settled ahead of this reset, this price reset? What will happen and how will that work out? And from all we can determine, this is solely contained to the unallocated gold accounts. There are a lot of unallocated gold accounts, LBMA gold accounts, people who have been offered the option physical, very expensive to hold. This is traditional, of course, or do you want it in unallocated form, much cheaper, but we'll still charge you. Well, all you have at this point is really an enormous counterparty risk. You're on the balance sheet of the bank that sold you this bit of paper. Now, this is my last minute warning for all of you. Cash out anyone who's listening to this cash out of all unallocated gold and silver contracts, and you must take that cash and buy the physical bullion, take delivery before the revaluation event. We will look at how you can buy and store and insure your bullion at zero cost through Kinesis in a moment, but literally to answer literally hundreds of questions I get about, well, okay, but I'm a US centric guy, I trade on the COMEX, what's going to happen to my positions? Well, really, bottom line, although a lot of analysts have said it'll default, I don't agree. The COMEX cannot afford to default or to call a force majeure. It would be the final death knell for all other contracts trading on the CME exchanges. Believe me, they have other interests than gold. A force majeure can be called in the event of really unforeseeable circumstances that prevent someone from fulfilling a contract. But that's in a commodity. It's impossible to legitimately call such a clause in against a contract directly linked to a monetary metal that trades as a foreign exchange currency cross and is directly, and the COMEX contract is directly correlated to it. So, and we've seen so many machinations here, despite a scramble to try and provide the illusion that this COMEX casino is morphing into a physical exchange. It's an illusion. That's all it is. The COMEX is not structured to become a physical exchange. The physical exchanges are in places where they're logistically better placed, far more liquid hubs. They're in London, Switzerland, Asia. So an attempt to call a force majeure would expose the entire COMEX game as a fraud and draw into question the integrity of all the other CME Globex contracts, something they don't want to do. As well, even more importantly here, draw the unwanted scrutiny onto the CFTC, not into, but onto the CFTC, and by inference, the DOJ, who have been aware of these, this paper scam for multiple years, but have been unable to do anything about it. So really, I see a COMEX default would be avoided at all costs. Now, what are the signs? Now, with the silver exchange for physical conduit already broken, the warning flag I would look for that a gold revaluation is imminent and likely as we approach 2,500, but it could be before, could be slightly after. What it would be if the COMEX to spot exchange for physical conduit is temporarily closed, or suddenly the evidence is close to zero transactions. Now, we're watching this closely, and of course, we'll keep you updated. Now, in answer to some other questions, really, a word of advice for those that follow the COT report, because this is another one. I mean, it goes back years and years and years. I've been talking about this deliberately rigged report. The CME's COT report only shows one side of this insider positioning and consistently triggers off erroneous calls from top callers. And you watch this one, this coming one this Friday, which is really dated yesterday and has no reason to be 3 days delayed. It's an electronic marketplace. They could publish this data. Insiders don't like them to publish this data. The reason they delay it for 3 days is for one reason only, to wrong foot as many people as possible. Now, what it's done is enabled erroneous calls from top callers who in the last 2 weeks I've seen have been out there on the wires calling for a top. And I've been doing it since the 1700s in gold and 17.5s in SI. And it's because they're wrong-footed. And by the time the next report comes out, it is again wrong-footed. So as I say, even though, I mean, regardless of any of that, and I think it's important people really do weigh this thing up when they read this report, it's not what it appears to be. Even if the COT report is accepted at face value, even after the test of $2,000 in the December contract yesterday, which is, we're doing this on Wednesday, speculative positions are well below Q1 levels. Why? Because insiders are also forced to hedge their short positions long because they're exposed to the physical market. And what COMEX-centric analysts fail to factor in when they issue structural warnings is that the same COMEX net short actors listed in the reports are rapidly getting long FX gold and silver as well in a bid not just to be hedged against the COMEX shorts, but also to get net long foreign exchange gold and physical ahead of the gold price reset. Now, from all we can assess through our close ties to the wholesale market, at the 2,500 spot price point, insiders will be positioned and ready for this upside revaluation. The wholesale market footprints evidence that this is what the first tier banks are doing. And we see these bullish drivers already in play. And the only solution to reset the gold price will be through the unallocated gold and silver markets. And so the unallocated gold contracts will be squared at a price point by way of a weekend cash settlement. So to really answer this whole COMEX issue, with the real physical price being determined the next session, which would likely be a Monday morning, and insiders are on the right side of a long over-the-counter FX gold contract, the COMEX price will actually rise accordingly, and paper profits will be made for those long or legitimately hedged, while non-insiders who trade the technicals, and watch out if you follow these guys telling you to sell, if you're naked short gold and silver, you will suffer devastating margin calls and be wiped out, because there'll be no way that you'll be able to exit that position. There'll be just no offers to sell. And such a solution, really, that we've just described, would rescue the COMEX, square unallocated positions, and leave insiders long the 10 times larger FX gold market. These insiders are not going to lose. And spot gold will continue to be T+2 deliverable and valued at a level that is where sufficient real bullion will be offered at a market to reflect real supply-demand fundamentals. What will that price be? I don't know. Nobody knows what that price will be, but we're now really on our toes, and we're watching the footprints as gold starts to migrate into this 2,500 level and silver into the 32s, which are both inflection points of a reset. And as of last night, and I'd study the OPEX data closely, these assessed levels still look to be the consensus levels that a gold price revaluation will have to commence. Now, this is currently the inflection point that would provide the least pain for insiders. So really, officials or not, they're going to lay down. Officials, what I'm saying is they've never laid down before in front of the steamroller. And so we should anticipate some really volatile sessions, maybe on the way into 2,500. But don't be phased. In my view, you don't get phased, because these stops are not flushable. Dips will be bought.
Awesome, Andrew. Thank you so much for that update. And I think regardless of our listeners' level of experience in the gold, I think we can agree on one thing. This is, like you said, history in the making. You know, Andrew, I was thinking about your story about how more than 10 years ago, you blew the whistle on the corruption happening all over the physical versus the paper. The amazing thing is 10 years later or 11 years later, you've been proven you were correct. And I was just thinking about it the other day. You were correct, but at that time, there was no solution. So you had the problem identified correctly, but there was no solution. Okay, what do we do about it? Now, I wanted to kind of switch gears a little bit back in the vault here and talk about the history in the making that we called the Kinesis monetary system, which in my opinion, I know in your opinion, that it is the solution to these challenges that we're facing in these historic times. And one thing that I'll never forget, the first time you mentioned the monetary system, this new monetary system, the first time we talked about it, you said something that caught my attention and it's never left. And that was that the Kinesis monetary system is a global game changer. Maybe you can just spend a few minutes and talk about the Kinesis monetary system. And I have some questions and maybe we can have a conversation about how it works, because nothing like this has ever been seen.
Ever before. And as you say, there's so much to delve into. And I mean, but Shane, as you know, and as you've just said, we always knew that the only way the paper gold sham and silver gold sham would end would be when real physical demand forced discipline on the paper market actors. And this is why I'm so proud, and I know you are, to be associated with the Kinesis monetary ecosystem, as this is the one monetary ecosystem that will speed up the process significantly. And we all know that there are probably 60 odd gold currencies out there, and good. It's good that attention is drawn, but not one of them actually defeats the one thing that you talk about multiple times, which always gets my attention. Yeah, not one of them defeats Gresham's law.
Awesome, awesome. Yes, we can talk about Gresham's law, and if for our listeners that don't know what that is, just go ahead and Google Gresham's law. That might be a good idea. But basically, Andrew, what I wanted to talk about, maybe because you'd mentioned it earlier on, and I really want to spend a couple of minutes here talking about the unallocated gold versus the physical gold or silver. When we talk about gold, we're talking about gold and physical silver as well. But maybe you can just address that, because from what I've seen out there, most people who believe they're holding gold, even if they think it's physical, it's unallocated. Can you just take a few minutes to address that?
Yeah, I think what again, this is what's so exciting, and this is again right from all the things you've said, which is how do we change this game? What is, there is only one solution that I can see. This is 80-20 rule. This is where it changes the fastest, and this is why we need people to really take note and get on board. Kinesis is the only solution that's able to actually liquefy and mobilize gold for everyday use. And this initiative is now moving right on the front burner. And what this means is that global vaulting providers and asset managers are able to eliminate vaulting fees for their clients. That on its own, without any of the other benefits, is a game changer that turns the allocated argument on its head. Oh gosh, there's so much more, as you know, but not only do users of the Kinesis monetary system eliminate costly storage fees, but all the users share in a fee shared yield model, which rewards every user for their participation based upon the overall growth of the system. So everyone becomes a part, and it becomes our system. And what excites me is how this accelerates the outflows of the paper market liquidity we're talking about into physical gold and silver. This is the solution. There's oceans of liquidity now sloshing around the world's equity and bond markets, looking for gold exposure right now. Kinesis offers the best value proposition for exposure to both precious metals markets as well as the crypto markets. And literally billions of dollars. It's inconceivable to imagine how much money is actually waiting to pour into gold and silver. Billions of dollars of physical gold and silver are destined to enter the physical gold and silver space. Now, Kinesis one-to-one monetizes this exposure and is facilitated through the trusted allocated bullion exchange, which for over a decade now has been providing the industry and now Kinesis a necessary, well-proven institutional grade platform, which is absolutely required. It has to be a trusted system for this to work. And Kinesis has been rolling out these sequential integrations. I know you've been following Shane, myself, and Tom, and Eric, and all the people that and Martin, and people who've come on and talked about it. But there's a whole sequential layer of integrations, and based on a roadmap that we are sticking to. And now the minting phase, and we'll talk about this in a minute, but the minting is that what you've referred to is native to Kinesis, and it's unavailable on any other exchange. And the ability to mint your own currency puts the power of a central bank in your own hands, enabling users to become market makers, not takers. Now, if you're a trader, that's a big deal. If you're a miner, that's a big deal. I mean, minting is going to quickly draw in the necessary liquidity, and it's all about liquidity, to fulfill the enormous secondary market demand. We've already got stacked in the hopper saying, give us some of this. We need this process. So it's just evolving. this is not too late to be involved. But more importantly, really, Kinesis provides not a solution, not just for asset managers, it's for everyone. Now, we've warned of the risks of holding high risk unallocated paper gold contracts, not just being cash settled and frozen out of a revaluation in gold and silver, but also the counterparty risks that unallocated gold investors are exposed to. So with Kinesis, you can securely hold the gold you own in your name in fully insured independent third-party vaults. So really what we're saying is each of us using Kinesis becomes a part of the solution to addressing a broken banking system. We can all claim a stake in the only sound money basket that defeats the law of money, Gresham's law, which Shane, I know you have followed by literally millions of people. Literally, I know millions of people who you have motivated and helped over the years. And I followed you, and you came into my life as a big silver investor. And then I found out more about you and how you had motivated and helped so many people. And that's why it's so appreciated with what you do here for us with Kinesis. Can you tell us really, again, there's so many reasons that you're excited about Kinesis, but run through a couple more for us.
Sure. Let's break it down. My gift, I think, and what I love to do is just talk to the person who's maybe just considering buying gold or hearing gold. I know we've got a lot of listeners that are millionaires and multimillionaires and that are in the markets, but I'd really like to break it down so that the new person that's just looking for a chance, right, that's just looking to provide a little better lifestyle for their family can get involved and positioned over the next 10 years to something massive. But what we're hearing and what we've heard and what we've been trained and what we've been conditioned about gold is for only the wealthy. Incorrect. Gold, you don't want to hold gold because there's no yield. No yield. There is now through Kinesis. So let's start off. I guess we can start off, and how I always start off is just by talking about, imagine having gold in your name. You own it, all right? But every month you're receiving a yield on that gold just for holding it, and no storage fees. Because one of the things, that a lot of investors that know enough to invest in physical silver and physical gold, one of the things that they just dislike is those monthly storage fees, month after month after month storage fees, and it's an expense and no yield. Well, Kinesis and our CEO, Mr. Tom Coughlin, and the whole team has put together this genius system where not only can people hold physical gold in their name, they receive a yield and no storage fees. All right. So that is one of the reasons why I'm so excited, of the many, many, many reasons. So maybe you can just even touch on that holders yield for people that are just holding gold or holding silver.
Well, I mean, that is unprecedented. That in all of history, that's never happened. The whole reason that gold has not been followed by asset managers and people have been turned out of gold and rather to chase the hot money has been told to chase other things, is because there was no yield. And so what that's done is, regardless of whether we had zero interest rates, regardless that we have negative interest rates, which are even more helpful, but regardless of that, to be able to create a yield in what was called a barbarous relic, I think by, that's not, Bernanke, I think it was, called it a barbarous relic. I mean, that you can create a yield in gold is actually turns everything, like I said, every asset manager on the planet Earth now can look at gold as a yield-bearing asset, which brings it into line with every other asset class. So this is really phenomenal.
So I know, Andrew, after the Sprott interview, you got a lot of questions, and I've seen a ton of them as well. But one of them that keeps on coming up is maybe we can just talk about the digitalization of that physical gold, ABX physical gold, and the digitalization that moves into the Kinesis monetary system.
Yeah, a huge amount of questions on this, and there's a social side to this too, which is important for us all. Kinesis digitizes physical gold and silver and puts it on the blockchain rails. We know that, but it's important that people understand that the blockchain rails are trustless. It requires no trust. As long as you can be sure that you're one-to-one, you have one-to-one allocated gold. Now it's helpful that there are, as I say, that there are some 60 odd gold-backed currencies that claim to be backed by gold, but none of them, without exception, has the bigger vision of creating a full closed-loop monetary ecosystem. And Kinesis is not just one-to-one backed by gold, but it provides, as we just said, users a yield, which is phenomenal. So from an institutional perspective, gold vaulting providers and asset managers are now able to eliminate their vaulting fees, just like you said, for their clients. That's a game changer. It's not only possible, this is only possible because the Kinesis monetary system mints physical gold and silver into a yield-bearing, safe haven asset that competes with all other asset classes. And it's important. It's an important message. And what really excites me is that Kinesis is not just an institutional solution. This is for everyone who, as you say, either sends, spends, or saves money. They can participate in our collective monetary system and share, as we all do, in this collective fee sharing pool. And in other words, Kinesis is not just digital physical gold and silver trading on the blockchain rails. It's much more than that. It's a parallel monetary system that's backed by fully allocated gold and silver. So when considering utilizing digital gold or silver, first and foremost, you have to determine it's one-to-one physical and fully allocated in the name of the user, in your name. And once you've determined this, then the trustless blockchain rails become the perfect solution to digitize your physical gold into small enough amounts that where it can also become used as an everyday currency. Now, Kinesis fulfills all of these criteria, but also becomes a fellow traveler with the likes of Bitcoin and other cryptocurrencies. And what really motivates me to draw attention to this solution is that the demand for physical gold, as we've said before, will exponentially increase. And blockchain technology on its own, based on the fact that it's one-to-one allocated gold, will kill the paper gold game dead. It can only be good for all gold and silver investors. And so don't be afraid of it, the fact it's digitized, as long as you know that it's backed by physical. And really also utilizing, this is really, really important. This is close to my heart too. Utilizing Kinesis, producers, the very people that dig this stuff out of the ground, can for the first time directly access the precious metals markets, cutting out a great deal of friction, cutting out a lot of the bad actors, and they become price setters, not takers. They create the price they're willing to sell it for. That turns the whole insider run daily fixes, where we are subjected to 2 daily fixes a day in gold and 1 in silver. It eliminates the need for that. It turns it into a liquid 24-hour market. Now, as liquidity flows into digital gold and the need for a twice daily fix evaporates, most people will know that it is that when you just talked about where we were fighting with the DOJ and the CFTC, it was about the fixes. And this is where that market manipulation lever has resided all this time. And all of my evidence provided to the DOJ focused on predetermined prices, i.e. RICO-determined prices. But this is the most important part. The social benefits are so extremely important. Each gram of gold entering the Kinesis system can be tracked from mine to refiner to end user. And this absolutely ensures the integrity of the entire chain, eliminates blood gold, and ensures a fairer deal for everyone. That's so important.
Excellent. Well, I'm fired up and excited every day. It just gets better and better. Andrew, I want to talk maybe about one of my personal favorite topics. The reason is because it's kind of a little different. It's different because it's never been done in history. But what I see, whether I'm talking to individuals, whether I'm talking to companies and some big companies, or whether I'm talking to government organizations, once they get this part, and I'll try to do my best to break it down, and maybe you can, address this at the same time, but it's the minting process. If you have a pen and piece of paper, write this down. Kinesis minting, all right, minting. And what does it mean? It means when you have physical gold, okay, in the Kinesis system, you have physical gold, you can actually take that physical gold and digitalize it into 1 gram, which is a KAU of gold, or 1 ounce, which is a KAG of silver. And what you've essentially done is you've given birth, you've actually given birth, okay, to the monetary system. You've given birth to that money. And what Kinesis does, and this is genius, is when you mint the money, that money, because it's on the blockchain, always remember who is the mama or the papa, right? Who gave birth to me? And to that person or to that company or to that government organization that gave birth or created that digitalization of physical gold or physical silver, Kinesis says when you spend or send or move or pay people with that money, from that point forward, you're going to receive not a cashback or anything like crazy thing like that. It's a yield that is a perpetual yield, month after month after month after month. And so next month, when you pay employees, or when you buy a new pair of shoes, or when you're paying out commissions for the distribution companies, that money becomes alive, rather than right now, the way I like to describe it, when you pay someone or when you buy something with $100 bill, you buy that money is dead, it dies, and that's normal. But with Kinesis, when you're sending or spending or paying someone, when you're moving that money, Kinesis, velocity, when you're moving that money, it starts to create an additional yield that has never been seen. And that, Andrew, from my experience, what I've seen dealing with people, with companies, or government organizations, once, and when I'm talking to them, I can see the light go off. They said, wait a second, are you telling me that if I have a payroll, a monthly payroll of 100,000 or $1 million in commissions, or if I'm paying out $2 million in commission, that money becomes alive because I created? And I'm going, yes. And then you see the light go off. They will never want to spend another anything other than Kinesis. Maybe you can talk a little bit about the minting, and you can see I get fired up when I talk about minting, because you can't find this anywhere. Well, who else does something similar? Nobody in the world, nobody in the gold or silver markets anywhere in the world is doing anything like it. And I think it's just genius.
Yeah, as you say, it's absolutely native to Kinesis, and we've just moved into this the minting phase of the structurally sequential Kinesis rollout. Now, you can now become your own central bank, and as I say, you can be a market maker and become part of the solution that will drive physical gold priced in all currencies actually to unknown highs, because you can actually transact in all currencies with Kinesis. Now, through our newly introduced gold and silver minting facility, you'll be able to buy, sell, spend, and trade gold and silver and experience the tightest spreads in the industry. So if it wasn't enough to be able to get these yields, you've also got the tightest spreads. It's not uncommon to experience spreads as tight as 1 cent between spot gold and silver, between the bid and the ask. Now, that's unheard of. And there's a reason for it. And when you study the minting process, you realize why that has to be the case. Now, real allocated physical gold and silver remember, this is always in your name. Now, I would encourage everyone to hop on the Kinesis.money website and open up a free Kinesis app, a mobile app. Essentially, minting is the profitable process of creating your own Kinesis gold bullion and silver bullion based in digital currencies. And as Shane has just said, KOU is gold and KAG is silver. A minter effectively becomes their own central bank, as I say, bringing this new KOU and KAG into the Kinesis monetary system. And when users mint KOU and KAG, they purchase, what they're doing is they're actually buying the underlying physical bars of allocated gold and silver bullion. And this newly purchased bullion sits in insured and independent audited world-class vaulting facilities with no storage fees for life. So all the storage fees are eliminated by a share of the global transaction fees charged across the entire Kinesis system, and the robust infrastructure of Kinesis bullion vaulting network covering all the major trading hubs globally, all sharing, everyone's sharing in the entire fee pool. So unlike when you spend your dollar, your pound, your peso, whatever it is, it's gone. This way you get a share. And the more liquidity that comes into the system, the more it benefits the entire ecosystem. I can't speak highly enough, because this is, to me, the solution that I've been striving for personally, that I know that Tom thought and created 11 years ago. This was conceived. It started with the allocated bullion exchange. It evolved into ultimately with the goal of ultimately transacting it into a secondary market that would need this, and to be able to do so, Kinesis has created this solution.
Yeah, Andrew, when I hear you talk and when I just keep thinking about this, the one word that keeps popping up is this is absolutely genius. It is genius. There's a couple more topics that I wanted to talk about that really excite me about the Kinesis monetary system, and that the first one is the KVTs. Maybe we can talk a little bit about the KVTs, because that's the biggest yield and the biggest return is for those who are fortunate enough or who can get a hold of KVTs, or who have or who are holding KVTs. Maybe we can just talk a little about the KVTs for our new listeners and for those that would like to maybe acquire some in the future.
Yeah, and I would strongly say, I would, in fact, if you want to see what sort of returns, conservative returns, by owning a KVT, by going on the website, there's a page there where you can enter in different values, and based upon the velocity of the Kinesis monetary ecosystem. So even if you put in 1%, even if you put a marginal growth percent, even though we know all of this new interest is coming into the only solution that enables you to get a yielding gold and to have no storage costs, even discounting all of that, which is going to come into Kinesis, then just put in the numbers and you'll see that this Kinesis, the KVT, is actually provides you it really provides you a share, the largest share of the entire monetary global yield system that the Kinesis monetary system generates. And I know, Jane, you've done some great webinars about this too. I know that it's your favorite.
Yes, well, what happens when I present and I go through the different ways that people can earn yields, and whether it's holding gold, whether it's minting the gold, they kind of understand that. When we get to the KVTs, everyone wants to focus on the KVTs because it's the largest yield. It's not because they like it more. They're saying, well, so they're looking at those KVTs, and basically 20% of the allocation of the yields goes out to those KVT holders. There's only 300,000. That's it. There will only ever be 300,000. And when they're gone, they're completely gone. The question that I get asked the most, Andrew, for some reason, because of the network, capabilities and so on, is the referral yield. And people sit there and say, hey, Kinesis offers a referral yield. Can maybe you can spend an hour and maybe explain how the referral yield works? Because that's normally how referral yield works. It's so confusing. And I go, no, if you have about 15 seconds, I can explain the referral yield. So here it goes. When you open up a Kinesis wallet for free, okay, for free, you can open up a Kinesis wallet for free. You're automatically given what's called a referral identifier. With that number, when you maybe talk to a family member, a friend, a company, someone that you know, or even a government organization, all right, Kinesis says when you refer, there's only one refer, the person that refers. So someone says, hey, check out, they open up a wallet, that referral link is there, and basically you receive 7.5% of every transaction fee that's ever generated from that particular wallet forever and ever and ever and ever. So that's it. That's the whole referral yield. It's simple, it's exciting, and anybody can do it. You don't have to be a genius. You just have to send them your link and let them review everything. One of the things that I would like to highly recommend for everyone, whether you're seasoned or just getting started in the gold and silver, you're hearing the buzz happening, you're hearing about Kinesis, is go to kinesis.money. In the support, one of my favorite is the learning system that Kinesis has put together. Again, it's genius. And there's 11 videos that will take you by the hand, simple, they're 2 or 3 minute videos that walks you through everything about money, what is gold, how does the system work, everything that you want to know about it is all there. So my encouragement to you if you're a first-time viewer, or even if you're there, you want to make sure that you get onto the learning curve and just learn all you can. And I can promise you, the more you learn about Kinesis, the less you will sleep. That's how it's been for me. So with that, Andrew, back to you for some closing comments. It's been an amazing call.
I think the whole thing we're talking about here is transparency and fairness. And I think that's what Kinesis is all about. Everything you see, everything you experience with Kinesis is fully transparent, fully insured, and there's a great deal of comfort there. And it's about fairness. And this, to me, is why I'm so proud to be involved.
Yes, and also when you open up a free account, you'll be on the mailing list of Kinesis. So Kinesis is sending out updates on a monthly basis, and there's so much going on with the virtual debit card, with the cool wallet. All right, with the cool wallet, here it is. It looks like a credit card. I'm not sure if you can see it. Let me see if you can see it. It's about the size of a credit card, and you can hold any amount of money on here. All right, and it's offline. So it's a beautiful thing, but there's so many new upgrades. There's the minting offer. Make sure you go to Kinesis again. If you are interested in minting, taking physical and minting it into the KAU or KAG, there's an offer that it's awesome. It's awesome. That can lead you to earn extra KVTs just for minting. So I'm excited. You can tell, and I look forward to continued discussions on this. We can go on and on and on. Back to you, Andy.
But I think that's important to mention. There is a special offer, and I'm glad you brought it up. It is the ability to earn KVTs while you mint. I mean, that is really it's not going to exist for long. I think this is the time now is to come in just as the minting program starts and grab your KVTs that come with simply doing the right thing anyway.
Awesome, awesome. So with that, everyone, I hope you've enjoyed this show. Please comment, like, and share this video with people that you know, like, and trust, whether it's a person, a company, government organization. Make sure you get the word out. This is amazing. I want to thank you, Andrew, for spending so much time here with me today and getting into the Kinesis monetary system and also the awesome update. So that's it for this.
My privilege.